Okay, so now we're going to move on to the final part, part 4, where I do some analysis in the markets. Okay, so let's see where we're going. So again, this is just some technical analysis that I put together. You know, it's so important to make those lines as accurate as possible. It can be the difference between staying in your trade and getting stopped out. Okay, so just a reminder, black numbers in the right hand column, support and resistance levels, trend lines that I've identified. Pink numbers are the breakouts, so you know where I expect maybe it's going to be a support level, but if it breaks through then it's going to keep going. Again, you know, it's trading, so there's no guarantees with any of this. And then the claret numbers, they're sort of where I've identified either horizontal levels or they're based on double or triple tops or bottoms. Below, there's a note of the pivot point colors. The blue one is the pivot point. The two above is R1 and R2. The two below is S1 and S2. And then on the right are the Fibonacci colors. And I believe I've added one, possibly two of those this week. I think it's only one though. Okay, so let's start with the Dow Jones on the daily. So as you can see from that, stocks had another really good week. It just seems relentless at the moment. So I've got resistance at 35,763, also 35,572 with that trend line there. I've got first support at 33,794. And then I've got a couple of breakout levels, which are 32,608 and 31,421. Then on the 30-minute chart, I've got resistance at 35,543 and support at 35,302. So as usual, Friday afternoon had its little end of week sell-off. You know, that's just people squaring their books over the weekend. They don't want to carry that risk into next week. They'd rather wait until Monday and get back into the position again rather than carry the weekend risk. As you can see though from that solid blue line there, that pivot point held really well on Friday and on Thursday and on Tuesday. So pivot points are great. You know, as pro traders, we've used them for absolute decades. If you want to find out more about them, then join one of our technical analysis workshops, only one day, and we'll help you with all of this. Okay, so moving on to the S&P daily, I've got 46.31 as resistance, and then support I've got at 44.32, then 41.54, then 40.31. Yeah, they're quite wide, but you know, with FOMC this week and PCE coming out, one or both of them could be tested. On the 30 minutes, again, that little stock sell-off towards the end of the week. So resistance at 45.88 and also 45.79 with support at 45.62. I've got a breakout level at 45.57 if it gets through there. Yeah, just remember you can always take pictures of these on your phone or take screenshots just as reminders. And just hold on to them, especially the daily ones, because you know they hold in for obviously a while, whereas the 30-minute ones they can change quite quickly. So on Nasdaq, I've got resistance at 16,568. I've got resistance at 16,022. I've got support at 14,236. Now there's another support in there, sort of about the 15 to 60 level. Now, you know, Nasdaq's again sort of been holding up fairly well, although it didn't end the week as strong as the others. It did sell off a bit. Looking at the 30-minute, I've got resistance at 15,729 and also 15,675. and then I've got a sort of it could be a support or a resistance level, depends on where the market opens, at 15,556 with support at 15,519. And then way below at 15,344 is another one of those breakout levels should it get there. It's really going to depend on the data this week, with the FOMC and of course on top of that PCE. So looking at the Russell, small cap companies, so they're much more sensitive to what's going on with the consumers and the economy. So resistance at 2008, support at 1852. So very wide, it closed on Friday around about 1970. But, as I say, big data this week. Big data, big market moves. Okay, so on the 30-minute, I've got resistance at 1992 and also at 1980 with support at 1968 with a breakout level below that at 1955. So, it's a support level, but it's not a solid support level. It's more likely if it gets to there and it breaks it, that it's going to keep going down. But, as I say, it's trading, so nothing's guaranteed. It's not recommendations. Again, just trying to help you, just trying to, maybe tune up your analysis for you. So, pound against the dollar. So here we've got resistance around about 131.70 and support at 128.57. At 125.99. 128.57 was where it closed on Friday after it had been up much higher, up to in the 131s. So again, the dollar just made that little bit of a comeback towards the end of last week. Moving on to the 30 minutes, got resistance at 129.36, also at 128.76 with support at 128.08. So here's the euro. I mean, euro got higher than I expected it to, that's for sure. It usually struggles in the 111s and yet there it was going into the 112s. But of course, the majority of that was dollar weakness rather than euro strength. So resistance at 112.60 and also at 111.59 and support at 108.32. So it's going to be an interesting week for the dollar. It's going to respond to the FOMC meeting and what Powell says afterwards at the press conference. And then, of course, it's going to have another reaction on Friday when the PCE data comes out. Of course, the US has got lots of other data out this week as well, which I covered in part 2. Okay, now on the 30-minute for the euro against the dollar, I've got resistance at 112.00, also at 111.76 with support at 111.35. So Bitcoin broke that 30,000 level on the downside. So I've got resistance at 132.443. I've got a couple of breakout support levels. So they are 29.215 and 28.220. So if it gets to those lines again, I'm expecting it, if it does break on the downside, that it could keep going. But remember, that's not a recommendation, that's just an observation. On the 30-minute, I've got resistance at 30.139 and also at 29.930 with support at 29.790. I think it'd be a shame to see sort of Bitcoin go all the way back down into the 25,000s after it's got here. We're still seeing negative news, positive news. A lot of it's probably still clinging to the hopes of getting an ETF approved. And here is Bitcoin versus Nasdaq. So, you know, Nasdaq's had a really good move up. It's just come off a little bit from its recent top. And of course, Bitcoin bust through the 30,000 level. Well, it didn't really burst through it. It's just gone below it. Hopefully it can sort of regain that this week. So here's gold, and I put the Fibonacci on for this as well, just so you've got an idea of what's going on. Now, you know, it did get to that sort of 2100 level, and then we had that sell-off down to 1900. So, yep, so it's had a $200 move there, and it sort of had a good rally back, but it's struggling again a little bit at the moment. It wanted to get up and test that sort of 50 Fibonacci level at 2000, but it's just struggling for the moment. It's coming back down. You know, it's a good two-way market. I mean, what can I say? You know, there's opportunities every day, and you know, be prepared to run some of those. Don't just jump in and out, because you know, there's plenty to be had. But of course, if you see there's enough in it for you, then you take it. On the 30-minute, I've got a couple of resistance levels here at 1966 and 1964 with those downtrend lines there. I've got support at 1960, and then I've got a breakout level if it gets to 1955. Last but not least, oil. So WTI got resistance, should it get up there, 81.46, but before then it's going to meet resistance at 77.32. And I've got support at 71.48. Seems quite comfortable in the mid-70s at the moment. You know, it's taken 3 OPEC cuts to make it stay here though. Okay, on the 30-minute, I've got resistance at 77.10, 76.97. I've got support at 76.29, then 75.70. You know, it's been a good week last week, very good week actually. And this is going to be a very lively week with lots of US data coming out, and of course, as I keep mentioning, that FOMC and PCE. Then of course, you know, let's not forget that there's the ECB meeting as well, where they're going to hike rates again, and then on top of that, we've got Bank of Japan that's probably not. So it's going to be a fun week, lots of opportunities in the markets. You know, we're in the summer period now, so sometimes the volume drops off a little bit, especially after this weekend just gone, because a lot of schools and colleges have broken up for the summer period now. So you see a lot of traders taking some quality time off with their family and going away. You know, that can sort of dilute the volume slightly. However, that does increase the potential for volatility. So just remember to make sure that you go in your trades, you do your analysis, and you make sure that, you know, you're going in with a sensible stop loss level, and you're sizing your position right, because that is so essential in these markets. So just to finish off, just a reminder of our services. Apart from these, we offer you a daily newsletter. Just sign up for it. It doesn't cost anything. It's free. We give you global headlines, global news in detail, my views, and of course, if you want to subscribe, there's fresh daily chart levels and pivot points. Then we've got a whole variety of different ways of helping you to progress. Anything from a one-day workshop. We've got one-week courses. One of them includes that free trading challenge, And in a week, you know, if you've got an inner trader, I'm going to help you find it. And then if you're really serious about trading, then we've got the comprehensive accredited masterclass, which is designed specifically to provide you with all the knowledge and trading tools you're going to need to navigate any market conditions, and of course any asset class as well. And then if you're interested in the funded accounts, funded trading accounts, then our Flexi Masterclass offers one of those as well. That's attached to the end of it. And again, just remember, you don't have to take that challenge the moment you finish the course. You've got time to practice until you build your confidence ready, and then go for it. And then on top of that, trader mentoring, you know, either an hour a day or per month, just to sort of help you, push you, get you, you know, I can help to identify any errors you've got, anything I can help you tweak to improve. I'm more than happy to spend some time with you to do that. We consult companies on FX and commodity exposure. We provide a whole mass of content, educational, to individuals, exchanges, brokers, lots and lots, and you know, some of the bigger exchanges and that as well, and some great brokers. And then, as I keep mentioning, if you want that funded trading account, you know, why risk your own capital when you can risk someone else's? But you know, you do need to qualify through their challenge to get that. To do that, then one of our partners is Nordic Funder. We are sort of probably going to add another one or two to this to give you a bit more variety, and a couple of those are going to be based on CFDs. If you're more into futures, then there's going to be one that is futures based for you as well, so it gives you the best of both worlds. And if you want to contact us with any questions or you'd like more details on anything, it's info@symaxfintech.com. My email, chris.tubby@symax-int.com. So that's it for this week. I hope you enjoy all of this. I mean, I'd love to get some feedback from you guys. If there's anything extra that you'd like to see put in, then please reach out to me, and I'll see what I can do. And all that leaves me to do is wish you the very best of luck for next week. Have a great trading week. I hope to see you again next weekend. Bye for now.